But most of you will remember this fella. His name is Michael Burry. He was the guy who shorted the housing market in 2006, 2005, before the big collapse. That's who they made the Big Short movie about, Michael Burry. So he had a big announcement this week out of his hedge fund. So this is the letter that he wrote. He said, "Dear investors, with a heavy heart, I will liquidate the funds and return the capital by year's end. My estimation of value in securities is not now and has not been for some time in sync with the markets. With heartfelt thanks, but also with apologies, I wish you well in your future endeavors or investments. Blah, blah, blah. I do suggest PM Clifton." So Burry's out. Burry's done. He's had enough. He said, "My estimation of value in securities is not now and has not been for some time in sync with the markets." In other words, he doesn't have a clue what's going on. And I saw a really good post kind of explaining this. Oh, there's dipshit Gloria there. Let me take this off for a sec so we don't have to look at her face again. But this was a good take on it. I want to read this here quickly because this was a post from X on why they think, and I agree with this take. That's why I want to share it. Why Burry's out. So this is from Endgame Macro. He said, "Why I think Burry's shutting down his hedge fund. Let's put a few things together. Burry's liquidation letter, his depreciation thread on the hyperscalers, and his me then, me now Big Short meme. And he's basically spelling out one story. He thinks we're in an earnings inflated, AI driven bubble that a value investor can't sit inside without eventually getting crushed." I mean, if you take a look at the stock market right now, and if you start running some calculations, nobody does this because that's the thing about the stock market is that it's all a bunch of forced buyers. Everybody who goes to their job every day and puts some aside for their retirement, whether it's subsidized by their employer or they're just doing it themselves, they have no idea what they're investing in. And if you actually look at the math on some of the stocks, like the PE ratios, it's so out of whack. Like the NVIDIAs, the Googles, the Microsoft, the big boys, their PE ratios are like 30, 40, 50, which means that your one investment, let's say you put $1,000 into NVIDIA, it's going to take you 30 years to get the same amount back. It just doesn't even make sense. That's why I titled the show today, "When the Math Can't Be Hidden Anymore." It just doesn't make any sense. So what I think Burry's doing here and what this post suggests is he knows that there's no way out of this. There's no place to go, especially in that system. So it says in the letter, he says it plainly, "My estimation of value in securities is not now and has not been for some time in sync with the markets." That's not I'm tired of running money line. That's a man saying, I can't reconcile what I see in the numbers with the prices the market is willing to pay. When someone like Burry reaches that point, the logical move isn't to keep collecting fees and hope its mean reverts. It's to get out of the structure that forces you to play the game at all. Then you look at his post on depreciation. So this one's a little bit different. We don't need to get into that because I think that was a different post he made, which we didn't look at. So put that together with the original post, and he's clearly casting himself as the same guy who sat in front of a wall of subprime prospectors in 2005. Back then, he saw engineered AAA paper built on bad collateral. Now he sees trillion-dollar market caps built on AI capex and accounting choices he thinks will blow up 2026 to 2008 as the math reverses. So why shut down his hedge fund now? He expects a major repricing in the very stocks that dominate the indices and doesn't want to live through the last craziest stretch of the bubble with other people's money tied to his name. If he's right about the under depreciation or the overestimation, then over the next few years, earning growth for the hyperscalers should slow sharply or even go negative as the AI narrative cools and the cycle matures. When that happens, multiples compress, passive flows that are overweight name in reverse, and the broad market takes a hit because the magnificent few are the market. From his perspective, that looks less like a normal correction and more like the equity version of the housing unwind. A long stretch of fake comfort, then a sharp break when the math can't be hidden anymore. Let's read that again. From his perspective, that looks less like a normal correction and more like the equity version of the housing unwind. A long stretch of fake comfort, which is what we're going through right now, then a sharp break when the math can't be hidden anymore. Closing the fund accomplishes a few things at once. It lets him step aside before that break, so he's not fighting client redemptions or daily benchmarking when he's trying to hold deeply contrarian positions. It frees him to short or sit in cash on his own terms without regulators and LPs looking over his shoulder. And it sends a signal. If valuations are this disconnected from what he thinks the true earnings are, the most honest thing he can do as a fiduciary is hand back the money and say, I don't want you in this. So in the view here, he's not walking away because he's done with the markets. He's stepping off the stage because he thinks the show has turned into something he's seen before, a late cycle mania powered by flattering models and aggressive accounting that ends with a long grinding reset in stock prices, especially at the top of the index. So to me, something like that suggests, because Michael Burry is a very, very intelligent guy. He was one of the very few people who actually not only saw the housing bubble, the housing crisis happen, but he actually bet on it with a lot of capital. And so he's pretty in tune with the markets. And so what this suggests to me is that, again, I completely agree with it. It says that he doesn't want his name to be associated with what's about to happen here. And so most people would see that and say, okay, I'm gonna panic. I'm either gonna hold cash or short. Most people probably wouldn't short the market because I don't think they're capable of doing that on their own. Like the average person just isn't. Mostly because not they lack intelligence, it's just because they don't spend any sort of time looking at the numbers, the math of it. So what I think a lot of people would do when they see this is hold cash. And they're going to be holding cash for the 2006, 2027, 2028, essentially what he's considering a collapse here. But what I think that my main takeaway from this is that the only place, the only thing, the only asset that is completely disconnected from that whole fucking circus, pardon my language, is Bitcoin. Bitcoin is the only asset that you can hold yourself. It's the only asset that you can truly own. And it's the only asset that's completely disconnected from that system. You have to understand that. Whether it's the stock market, the bond market, the real estate market, any other market, even the gold, the paper silver, the COMEX, Bitcoin is the only asset that's completely different, disconnected from that system that is about to go. Whew. And I don't know what it looks like. I don't know if it's everything just falls in price or if Bitcoin surges and essentially reprices those markets. I don't know what it looks like, but that's a pretty clear signal in my mind anyways, that not only should you be out of the markets, but you should be holding Bitcoin. Because when you're holding Bitcoin, nothing else matters. The world can do whatever it wants to. Nobody can rug you. Nobody can seize it from you. Nobody can manipulate it. I shouldn't say that. It is fairly manipulated today because of the stocks associated with it. But at the end of the day, long term here, it's a completely different asset class than everything else. And so in my mind, the only safe haven right now, the only safe haven that exists is Bitcoin. And not only a safe haven, but it's going to be the best performing asset for the next 1,000 years. And so if you need a little kick in the ass here to get out of that market, out of that manipulated illusion that's way overvalued, way overpriced, it's a joke. It's what it is. It's just a joke. And there's so many people who have no idea what they're doing, who have so much capital invested in that because it's always worked. But the thing about the world is things change. It doesn't happen very often, but it does change. And we're actually living through that right now. So what you don't want to do is start telling your friends and family and all this, because they're going to look at you like you have three heads. All you need to do is stack as many Satoshis as you possibly can and send them to your cold storage. Don't leave them on the exchanges. Don't leave them in hot wallets. Don't leave them in anything. Get them into cold storage. That's the only way that you're going to escape what's coming here.